So this is a stock that analysts believe has more than a 50% upside currently, and I haven't seen the stock being covered anywhere on YouTube yet, so this may be a first. Now this company checks a lot of my preliminary boxes for me to even consider putting any money into. It's high growth, has good margins, its technical chart setup is looking pretty good, and although I don't own the stock yet, as of recording this video and as of releasing this video, I could open up a position in this very soon, either for a swing trade or maybe this gets added to my long-term portfolio. However, I think it's more likely to be kind of a swing trade with some good upside opportunity. Oh, and to add to this, guys, this is a cheap stock. It's trading at under $19 per share today, has a market cap of less than $3 billion. So there's a lot of opportunity for this company to double, triple, quadruple its value and still be a somewhat reasonable business for what it really offers to the marketplace. And I think because of what happened in 2020, because of the shift to online and how businesses are conducting everything virtually and online now, this company becomes so much more important, and I wouldn't be surprised if there's a large tech giant out there eyeing this business right now for a possible acquisition. It's also a well-recognized stock. The brand name, I'm sure you guys have used their service at some point. And overall, I think it's gonna be a very interesting video here, guys. So if you could just take a second before I reveal the stock, drop a like down below to help support this channel. But anyways, let's get into it. SurveyMonkey, ticker symbol SVMK, is the stock, and I'm sure at some point you've either created or participated in a survey that's been hosted by this company. So now some of you are probably thinking, Nick, are you seriously gonna go over a survey stock in this video? Yes, the answer is yes. I will seriously be going over this because this stock is severely oversold. This stock is fairly cheap, and this stock has good growth potential going ahead, so why not? They're such a well-connected business as well. They have partnerships with Zoom and ServiceNow and have integrations with Microsoft and Salesforce, which are both absolute giants in the enterprise world. This has resulted in their enterprise sales part of their business making up 29% of their overall revenue as the world has adopted services like Zoom in the past year. Now here we can see a more detailed breakdown of their enterprise customers, and we can see that this segment is accelerating faster than other parts of their business, and they currently have over 8,200 enterprise customers on their platform. Now the reason that enterprise customers love using a product like SurveyMonkey is because it makes it very easy for them to go out there to their employees and figure out ways to optimize, consolidate, become a more efficient business, and at the end of the day, save costs. This, of course, will result, in a more effective business, a more attractive business for investors like us, and also a more profitable company. SurveyMonkey is also leveraging AI and machine learning to help businesses with this, which so far they are seeing very good results and feedback from with their SurveyMonkey Genius offering. Overall, guys, their metrics are improving consistently year over year, and what I really like is that their ARPU, average revenue per user, is growing as well, and this implies to me that their customers spend more and more with them as time progresses, which is ideal for a software type business. And really, with all of this going on, with the stock suppressed so severely right now, you would think that the good days for this company is done, but that's far from the truth. 2021 growth is expected to come in at 17% year over year, and I think they'll probably exceed this and probably get closer to 20. And then next year, 2022, it's expected to accelerate to over 20% growth to over $500 million in revenue. So no, this is not some rinky-dink, insignificant business out there. It's a pretty well-known brand, a company that's going to be bringing in $500 million in revenue in a year. And like I said, I think it's probably an acquisition target at some point. So I think we can unanimously agree here that their metrics look good. But I want to point out a few more things to you that gets me excited about this name and why I may take a position in this as a swing trade very soon. So here's the chart for SurveyMonkey. I just wanted to jump over to TradingView here, the charting platform, to show you what I see happening. So previously, before all of this massive sell-off recently, we could see that the 50 moving average on the weekly chart was pretty good level of support for this stock. Like it's supported there, supported here. Here, of course, we broke through when the whole market sold off, so this is kind of an abnormal event, but we bounced back fairly quick. Now here we're seeing something similar happen again. We came back to the support, we broke through it because the market sold off, and now we're sitting slightly under the 100 moving average, which again is a strong level of support, but it seems like the stock is just trying to find a base here so it can start moving higher. Now when we look at previous time frames, we can see that the level it's at right now has always been kind of a level of consolidation for the stock, so it's very likely we continue moving sideways for a little while before we break higher. However, if history is any indication, when the market sells off and the stock gets pulled down irrationally, it bounces back strong and, makes a good amount of money for investors. Keep in mind, just about, a month ago, a little over a month ago, this stock was trading at nearly $30 per share. Now it's shaved off nearly half of its value, trading at $18 per share. It's a big correction in the stock. So I think this one could actually bounce back quite strong and provide us with some good returns here. The other thing I want to point out with you guys here real quick, just using StockRow here, not sponsored or affiliated with them, just a good service, absolutely free. You can see that they have very strong gross margins, which have been improving year over year. And they also have a very reasonable price to sales. We're actually trading at under a 7 price to sales right now, which historically has been cheap for this stock. So during the 2020 crash, we came down to around a 4.7 price of sales. We're not that far above that right now, but we're definitely below what we're trading at about a year, 2 year and a half ago. And that's where the stock found some sort of consolidation. So I think right now, what I'm trying to say is that we're a bit too oversold, and we're probably going to see some sort of bounce back with the overall market recovering. Now, while we're here, let's look at a couple more things on StockRow. We can see that the metrics are looking pretty good. Revenue has been increasing nicely year over year. Net income is negative, and this is looking pretty consistent, continued decline here as we get closer and closer to the positive numbers. When we look at free cash flow down here, we can see that this company has actually been free cash flow positive for a few years now, and it seems to be accelerating. We should reach close to $100 million in free cash flow in just a couple of years, and that may seem tiny, but remember guys, this is a small business right now, and $100 million is quite significant for a $2.7 billion market cap. So now we can see in terms of valuation and growth, this is looking like a very strong turnaround play. The market has ignored this company. The market has sold off this company. It's just been dragged down with the overall market, high growth stocks just being trashed lately. So I think there's a good potential here that we can make a good amount of money in a fairly short period of time in this stock. But guys, I want to be completely transparent in this video. There are some downside risks with SurveyMonkey, and we need to discuss that as well, because if you're considering the stock as a swing trade or even as an investment, you need to understand what could go even worse with this company, what could drive the share price even lower. So there are a couple of downsides that we need to consider with SurveyMonkey. Now, there's two main things, right? There's the balance sheet risk that I'm going to show you in a second, and there's the competitive part of it. So let's first look at the balance sheet here. We'll jump over to their financials. We'll look at the balance sheet. And we will see here that they have a good amount of assets on hand. They have around $200 million in cash. They have around $800 million in total assets. But one concern that I have is that their goodwill is fairly high. It's nearly $500 million, makes up a good chunk of their total assets. And typically, I don't like to see goodwill this high. It's intangible. It's not really going to be useful if they're in a pinch. So this is definitely a concern here, and I see this as, a drawback. So if we subtract this really from their total assets, we're sitting at around a $400 million number for their total true assets. Compare this to their liabilities, which is around $500 million. The company is technically underwater if we remove that goodwill piece. They have around $200 million in long-term debt, but the rest of it seems to be kind of just day-to-day business here. So $200 million in debt long-term, $224 million in cash. They can technically cover this. So I'm okay with this stock, the balance sheet right now. However, not a huge fan of the overall balance sheet. I wouldn't give this a good rating. I'd say it's an okay rating, possibly even a not so great rating. So that's definitely the first risk to consider. Now the other risk I'm sure I'm going to see in the comments is their lack of moat. They create surveys, so what? Not that complicated. Other businesses can replicate this. Where is their moat? And you know what? I would tend to agree with that. Their moat's not that strong. Any company can really create surveys. But what they're doing is leveraging things like AI. What they're doing is leveraging things like their brand. And clearly, just, being objective here, I don't hold the stock, so I'm just kind of looking at this from a neutral perspective. Their metrics are growing year over year. And that tells me that, yes, maybe they don't have a very strong moat, but customers are still paying for their service and their metrics are just improving. So I would say it's pretty clear when it comes to surveys, they're probably the first brand people think of, both from a consumer perspective and probably also from an enterprise perspective. And that's powerful, and I think that has some staying power. Now, SurveyMonkey has two parts of their business that they can leverage, which is the consumer and the enterprise part. And because of this, their TAM is actually pretty big, so there's a lot of opportunity. From an article that I read, their TAM is expected to be around $27 billion today, and SurveyMonkey has a measly 0.7% of that market. So there's tons of opportunity for growth, even if we were to get, say, 1 to 2% of the total market in the next few years. Their valuation would explode if that happens. So guys, based on the information I presented to you, I think the opportunity is there. Worst case, this at least warrants a little bit of your time to do some due diligence on, look at the numbers for yourself, look at the charts for yourself, and decide, okay, is the risk to reward worth it for this business? I personally think that it may be worth taking a little bit of a dabble here. I may open up a speculative position, short-term position this week. I'm being transparent. I don't really think this is going to be a stock I'll hold for the long term, but I think I can make some good money on this with a quick turnaround and recovery. And hey, like I said, this could be an acquisition, right? A company like Workday or maybe ServiceNow or some other enterprise company could probably come out and purchase them, maybe even Salesforce, or maybe even Microsoft. I noticed Microsoft has been pushing a lot of surveys recently with LinkedIn. I've been getting emails on that. So maybe they go out and purchase SurveyMonkey, and that'll help them streamline that process as well as sell that product to other customers as well. So just deep down inside, guys, I just have a feeling this is definitely one that companies are looking at to buy out at some point. But regardless, whether they get bought out, whether they just keep doing their own thing, this is an interesting business. Ticker symbol again is SVMK, and I, for one, am interested in looking into this further. So guys, let me know in the comments, are you on board with this investment? Will you spend more time looking into this? Or is this just kind of a business that just has no moat, so it doesn't really appeal to you? I'd love to hear your perspective regardless in the comments down below. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.